Well, hello. Thank you guys for joining us today. My name is Hall Martin. I'm the CEO and founder of 10 Capital. In this Ask Me Anything today, we're going to talk about the funding funnel. As we go forward, if you have any questions, feel free to put them in the chat box and we'll take those questions as we go and at the end as well. So looking forward to catching up with you guys today, and hopefully this will help you in your fundraise in working with investors. So uh, Scott Adams once wrote, "Losers have goals, winners have systems." I read his book. It was a really good book. I really learned a lot from it. And so in the fundraise, you should be setting up systems. As you hear about, contact, and meet investors, you need to keep track of those investors throughout the fundraise. It's the very same process as sales. It takes 7 touches to close a sale, so it takes 7 touches to close an investor. And so in today's webinar, we're going to talk about the 4 stages that you need to go through. If you want a copy of these slides, please let me know. And we also have this in a PDF on our website if you want to look at it in that form as well. So on the next slide, let's talk about stage 1. This is generating awareness. And what you need to do is figure out who your ideal investor profile is and then go after that type of investor. And you can see the different type of investors, different sectors of interest, different revenue stage at which they invest. And what you do is research investors on LinkedIn, Crunchbase, and other sites to find out more about them. And then prioritize investors based on who is the best fit for your deal. And then you make contact with them. Look for companies the investor has funded and gain an introduction from one of those companies that is in the portfolio of the investor. That's the best way to reach them if you don't have a direct connection otherwise. Trying cold email is a last resort, but can also be used. In the initial contact, keep those emails short and make clear what you have to offer and why it's a good fit for the investor. I see you invest in fintech. This is a good fintech deal. That type of thing really starts to show relevance to the investor and increases the likelihood they'll sign up for a call with you. When you get a first call going, one technique I always use is to say, quote, "I'm not raising funding now, but will be in 3 months." And then I ask permission to keep them informed. This allows me to follow up with the investor, but there's no ask for funding, advice, or introductions. And this relieves the pressure on the investor who is anticipating an ask that requires their capital, time, or reputation, respectively. And when the pressure is off, they'll be much more open to hearing your story and getting to know you more. So if the first words out of your mouth is, "Do you want to invest?" it's going to be hard. If you build a relationship, this will be a lot easier as well. So once you have some initial contacts and so forth, and again, make sure you capture them someplace so you keep track of who you have contacted and where they are in the process. We move to the next slide, number 5, and talk about the next level or stage, which is interest. Now, in generating interest with the investor, my number one rule is don't show up empty handed. If all you have is a forecast, I will tell you forecasts will get you nowhere. Set up a mailer template and distribution list and schedule a date on the calendar to send out 2 mailers per month. After you've had an introduction and talk with the investor, either in person or on the phone, it's important to follow up the investor to answer questions, update about progress, and walk through diligence. Investors are not interested in spending time on the phone to hear about your forecast. They're looking for updates about your progress with sales, team, product, and fundraise. In short, the things you are in control of and not the things over which you have no control, such as market growth, competitor actions, etc. As always, you need to have a growth story, and your calls need to update the investor on those points. Investors only know what you tell them. If you don't mention key progress, then it does not exist in the minds of the investor. The investor is not responsive to your emails. Consider the following. Follow-up takes more than just sending an email. Try texting and calling them after you know them. And when you call and they're not available, then ask for a better time to talk. Not all investors hang out on email. Some only check it once a day or twice a day. Investors have many other things on their plate, and your email may not get top priority. When asking for a call, make sure you're bringing new information about the business, especially information the investor asked about. If they asked about revenue or team, board, product, etc., make sure you have an update for them about that. And before you end the call with an investor, set up the call the next time and put it on the calendar with an invite. Go ahead and get something scheduled if you can, and avoid the chase around in contacting them later. So once you have that, next stage is, next question is, what if I'm pre-revenue? And I get this question a lot. I don't have revenue. How do I tell my growth story when I don't have it? And my message is always, in every discussion with an investor, you should always bring up a real world prospect or customer. Before you even create the product, you should first talk with prospective customers. You should gather their concerns and understand their desired solution. Take this information to your investors and show how you are engaging with prospective customers even before you have a product. It's very hard if you don't have any customers in mind to go forward and generate interest with the investor, because you're still leaving one of the biggest challenges on the table left undone, which is who's going to buy it. And so demonstrate the story of identifying the customer's needs, proposing a solution, building the product, and closing the sale. Take the investor through that journey with you. Some people only want to tell the investor about a customer that has bought something, but they aren't telling them about the prospect that is following along and guiding the product development and expressing interest and giving feedback. That's all part of the game as well. So in pre-revenue, you need to get to talk to prospective customers and bring that dialogue into that with the investors as well. This makes for a compelling narrative as it shows the customer going through the whole process. So the next stage is stage 3, is the desire. Here you have to create some momentum to get the investor to move forward with it. So as you go through the process of talking to the investor, make sure you talk about the other investors that are following the deal and those who are joining. Investors want to know that they're not the only ones in the deal. There's a reputation risk for the investor if no one else comes in, and investors don't want to lose face in the community, as it hurts their chances for future deals. Include in your twice monthly updates to the investors not only those who have invested, but those who are interested and those who are committed. So if I tell you I'm interested in a 50K investment, that's interest. If I tell you I'm going to put in 50K, that's committed. And if 50K is now in your bank account, that's invested. Show all 3 levels with the investors as you go through it. Don't undersell it, but don't oversell it either. So for investors who pass, along the way, investors will come and say, I'm going to take a pass on this, move them to another list to say these guys looked at it and they passed on this date. Mark on the calendar 3 months from that date to go back to that person and say, we've made some good progress since we last talked. I know you passed, but just want to give you an update. And if there's been substantial progress or traction, many investors who pass will now be in the deal. So even though they pass, we want to respect that. At the same time, if you do move the ball forward in a big way, you'll find that some of those guys will come back alive for you as well. So the next stage is commitment. So in stage 4, what we're going to do is start to figure out who's interested and start driving commitment from interest. And the way we do that is we try to figure out on the investor side what they find interesting in the deal, what's attracting them to it, and double down on that. If they like the traction or the team or the product, make sure we're continuing to talk a lot about that. And then next is start to figure out, and it's fair game to ask, what kind of diligence do you go through, just so I get documents ready for you, and start to figure out what level of commitment they might want to bring to it. If you would like to, and if they have any concerns about the deal, you're always trying to surface what they consider to be the risks or the challenges, and then you know what to address out there. If you don't know what it is, you could be just shotgunning all over the place trying to figure it out. But it's best just to go ahead and ask them straight up, what concerns do you have? What risks do you see in the deal? And what's holding you back from making an investment? So get the risks out on the table to discuss, and follow up with updates to show how you mitigate the risk in the deal. Every investor has concerns, so it's important to surface them and address them. With the concerns addressed, ask if they would consider an investment. If so, start with the range of investment they would entertain, 50K to 100K, something like that. be very general about it. Don't drive to anything specific up front. And with the range, continue to ask questions and update them about your progress, and start narrowing the range to a number. At some point, they'll land on a number that is comfortable with them, and then you confirm that number to see, as if it's still the same as it goes forward. Sometimes it goes up. They see more traction in the deal. Sometimes they're looking to increase their commitment to it. Once they commit, ask them to sign the term sheet, as funding is typically contingent on passing due diligence. But go ahead and use something like HelloSign or DocuSign, so make it easy for them to fill out the forms, sign and return. And after signing the term sheets, ask for the investor's diligence process and provide the appropriate documentation. If they have any descriptions about their program or process for diligence, you get a copy of that and then follow that. This helps set expectations and reduces the "how's it going" calls. Once they finish diligence, and you can then send them the wiring instructions. You can also incentivize investors to expedite the process by offering additional warrants and other incentives if they do so by a certain date. I know investors who will hold up the term sheet and say, those who sign up this month get 2 warrants, those who sign up next month get 1 warrant, those who sign up after that don't get any warrants. And warrants are simply an option that lets them buy additional pieces of stock at a certain price. And those are great sweeteners to put in on the deal, but incentivize them to come in early rather than late. Always break it down into baby steps. Never ask people to do 2, 3, 4 things all at once. Ask them to do one thing at a time and move slowly through the process to maintain momentum as well. In the next one, let's talk about your data room. When you go out to raise funding, you need to build a data room, or what I often call a diligence box. And it's the standard documents that most investors will look for in doing diligence: entity filings, patent filings. And what you see here is what you normally put in these. If there are other documents that are relevant, such as lawsuits, byproduct breakdowns, by customer breakdowns, anything relevant should also be included into it. It's important the investor reviews your diligence documents to answer any questions. And it's important to go ahead and put it together up front, so you're not scrambling around trying to find these documents later when the investor's ready to sign the check. And you'll find that many investors will use it over and over again. So it's good to put it together up front. As new documents become available, like tax returns or other requests, go ahead and put them in the box. Anybody can use them at that point. It's fair game to ask for an NDA if you have truly confidential information in that diligence box. At this point, an investor will recognize that's important, will sign the NDA to get access to the box and move forward with it. So on the next slide, let's talk about close out here with the funding funnel overview. So just like sales, you generate a lead, you qualify that lead, you nurture the lead along, and then you close the lead. Close investment by signing a term sheet using DocuSign, perform diligence, and then at that point send out the wiring instructions or pick up checks as well. So track the investors through the funnel so you know where you left them and you know what the next step is to take them going forward. Again, it's baby steps. It's always breaking it down into smaller and smaller steps. So with that, let's see if you have any questions. Feel free to post them out there. So one of the first questions is, how many investors should I expect to be in talks with? You want to be contacting at least 10 investors every 2 weeks to set up pitches on phone or Zoom or what have you. And you want to be able to and anytime you put that on the list, then you're going to be adding that to your spreadsheet. At some point, some will come back and drop off and you can take them off the list. But my rule is that 15% of the investors you talk to are going to ultimately write a check. Again, it's just like sales. In sales, 5 to 10% are ultimately going to buy your product. And so you have to get out to a fair number of people. That's why you want to set up standard pitch decks and diligence box and almost a CRM system some people use for this process to go through and keep track of everybody and what funnel are they in. Are investors easy to reach, or do they typically have gatekeepers? I think today most people no longer have gatekeepers like admins or secretaries or what have you. Everybody's doing a direct connection to the world. They do have a very large number of emails coming through a day, 200, 300, 400 emails come in a day. And so when they're going through, they're actually screening at that level. One of the key things about making introductions is your subject line needs to be compelling. Put up there in the subject line what why your deal is compelling. If you just made a big sale, or you just hired a new rock star team member, put that in the subject line. Even if they don't open the email, they will get that information, and that they will remember that at some level. And so the key is, the gatekeeper is no longer people. The gatekeeper is now the systems we have to go through, which is social media and email for the most part. If you can get a direct introduction, that's great. I find introductions work well. That always warms people up. The challenge is that it's very time consuming, and you can only get so many of those. Your network only goes so far. And so you have to start finding other avenues to get out to them as well. So the next question is, how do I make sure my deal stands out? So aside from the subject line, what you need to do is, at the first two sentences, is put a very strong lead that grabs them. And what they're looking for is not that you just sold $1 million. They're looking for, how is this deal relevant to them? As we talked about earlier, if investor is in fintech, highlight that up front, that you have a fintech deal that's very similar to the area in which they invest in. And now they've got piques their interest, because it shows you've done your homework, and it also shows that this deal may be a good fit. Somebody's actually qualified this, so you're moving your way down the funnel of interest already. So put those in the first two lines. Don't bury the good news on page 10. Put it right up there in the first two paragraphs. Everybody reads a paragraph or two, so make sure you get the good stuff in there. And then if you have any other questions here, we can glad to take those as well. You might want to get the PDF that you can keep track of this stuff as well after the webinar. And next question, is this something 10 Capital can help me with? Yes, we can help you with finding investors and making introductions. We believe in the investor relations process. I find that many investors, building a relationship is a key part of it. It's not just learning about the deal, it's getting to know them, and you getting to know them as well. And so building the relationship both ways is important. And that's why it's not so much how much you put in each touch, it's the number of touches that we look at. The repetition breeds familiarity, and it gives you a chance to, in a drip fashion, bring out a lot of new information about your deal. And at the same time, you get to learn about them. What are they interested in? What do they invest in? How can they help? Who else do they know? These are good questions to bring up in these dialogues with investors or email exchanges, is to build that relationship itself, because investments like this last for many years, and investors are very careful about who they invest with. And likewise, a startup should be very careful about who they spend time with as well. And so you're always using this as a chance to understand the other side very well in what you're doing. So are there any other questions? Please go ahead and pop them in there right now. If you go to the 10 Capital Network, we have what we call funding as a service is our main program. We help startups raise funding. My background is I started 3 angel networks in Texas back in the 2000s, and I saw the challenge people had in putting together a fundraise program. And the big mistakes were they did not have their documents put together. And they did not build a relationship. They came in, they were very good about pitching once, but they didn't follow up. They didn't come back and demonstrate the growth story. Because what many investors are doing is looking to get a series of data points over a period of time to see if the dots connect and the line goes up and to the right is what they're looking for. And they want to see that there is some traction momentum here. And that's what this process is all about. As you bring investors through, you have to go back and update them many times about how you're making good progress with it as well. Well, I appreciate you guys joining us today. If you have any questions, feel free to drop me a line. Glad to jump on a call and talk about your fundraise and how we can help you. And if you have questions about investors, happy to answer those also. Let's go ahead and stay in touch, and appreciate you guys taking time. If you have any other questions, feel free to raise your hand now, or we'll go ahead and close it out. But appreciate you guys joining us today. And we're in a brand new year, and we're finding that the market is very hot right now. There's a lot of investors with a lot of money looking for a place to go. And it's a good opportunity to go out and start a new business, as we have a whole new set of careabouts this year that the market's moving forward on. So with that, let's go ahead and close it out. Thank you guys for joining us today, and appreciate your time. We'll let you get back to it.